40% of the demand comes from the country, and inventories at the London Metal Exchange also rose, hurting stocks across the board like Exxon, Chevron, Freeport, Newmont, Barrick. Betty, it's not just banks hurting stocks today. Back to you.
Alex, thank you. We were just now 4 minutes away from the opening bell. Futures have closed lower, and of course we are watching J.P. Morgan weighing on the markets after that $2 billion trading loss. We'll be back in just a few moments. Welcome back. You are in the loop. I'm Betty Lou. The opening bell is moments away. Our markets team is ready to take us through the bell, and Sheila kicks it off with Nordstrom.
And Betty, shares of Nordstrom's, the high-end retailer, are down this morning. They're taking a hit. The company reported first quarter profits that fell short of estimates. Now, the big reason, they are putting a lot more money into their e-commerce efforts, so hopefully that's going to push the top line eventually, but right now it is a dent in the bottom line. Josh?
And Sheila, I'm watching Avon edging higher here in the pre-market. Of course, we learned that Coty has boosted its offer to acquire Avon to about $10.7 billion and said Warren Buffett's Berkshire Hathaway will provide financing. Coty working to draw Avon into a deal that would add a new door-to-door distribution channel for its cosmetics. Coty saying the offer will be withdrawn by Monday if Avon doesn't enter discussion, Betty.
And we got to talk about the banks.
It's not just J.P. Morgan. Also watch what's happening with Citi and Morgan Stanley, both two of the bigger decliners among the other banks that are not J.P. Morgan, among the most active to the downside. We'll see if that carries over into this trading session.
Okay, we will definitely watch that. Now, we've got more on that huge J.P. Morgan trading surprise. We are back with Keith Wirtz, the President and Chief Investment Officer of Fifth Third Asset Management, which, as we had mentioned, owns over 2 million shares of J.P. Morgan in a number of the funds at the firm. And also, of course, Trey Kinnepa from the CME is joining us as well. And Trey, let me turn it to you first. This J.P. Morgan news, how big of a factor will it be in rattling investors, not just today, but going forward?
You know, here we are still in the wake of the MF Global disaster, and then this happens after that. This just absolutely baffles me. Who in the world at these banks is minding the store? It really has me concerned. And now we have to imagine that the more pressure for the increased regulatory environment, that appears to be sort of the path of least resistance right now.
Let's take the fundamental approach to this. Keith Wirtz here. We're talking about a lot of banks who may have to now grapple with the reality of the Volcker rule and more kind of constraints on what they can actually do here. So how much of a headwind is this for not just J.P. Morgan and their reputation, but for the profits of the entire banking business right now, Keith?
You see, I agree with some of the analyst comments that you described earlier on the show. This is ill-timed. We can't afford to have this kind of news hit the tape when you've got all these regulatory considerations, the Volcker rule and such. I think inherently in these business models there's going to be risk-taking. I think banks like J.P. Morgan, based on their business models, should suffer the consequences of their mistakes. I just worried now that we're going to have enhanced regulation, and I'm not really an advocate of the Volcker rule. I think the banking models suggest kind of risk-taking, and this is going to be an impediment now for the banks.
Well, and Keith, earlier this year you had finally, for the first time, overweighted financials. So in light of this and watching the impact going forward, are you going to, are you more wary about that overweight, and what would make you then scale back on that?
Well, for one, the banking stocks are going to be under pressure because there's been some healthy profits derived or generated so far in 2012. Investors are going to want to protect those profits. As we look forward for the balance of the year, we're entering that season of worry right now, and the banking stocks likely going to be under some pressure. I still think we're going to remain committed because we've gone through such an exercise from 2008 until today with the banking industry itself. We still like the banking industry. We're going to continue to monitor, but for now the banking stocks are going to be under some pressure, and we think for investors that have been under-owned in the banking stocks, you may have an opportunity to buy some quality, buy the regionals, and play through the summer months in that regard.
Trey, I want to bring you back in the conversation. Commodities has been a lot of talk of the markets. They've been wiping away a lot of their gains. What's the trader talk on what's happening in commodities?
Well, the leader has been the crude to the downside here. I think you've got some concern about global economic health. The one thing I'd be a little bit cautious, though, we've got a report on Monday in crude, and this report is going to give us a better picture. The reports that everybody kind of focuses on is the numbers in storage in the U.S. in Cushing, Oklahoma, you know, what we have going into storage, coming out of storage, that sort of thing. That has been showing storage increase like we've got lots of supply. The world picture of crude, I think, actually looks very different, and that report on Monday could really surprise a lot of people. You're in the season now where you're supposed to be building inventories, and yet I think globally, if you look at the carry spreads in Brent crude, those spreads are actually inverted, and so that is a much more bullish picture on sort of the global crude supply than necessarily here domestically. And I think that has a lot more to do with the fact that this is an election year, and the politicians in Washington want to kind of give everybody, you know, oh, it's fine, gas prices are going to go back down. Guess what? Gas prices key off of Brent, not off WTI. So I think it's a political move more than anything.
Keith, give me your take on that. I mean, you know, Trey has been very, very firmly watching crude as an indicator, but just quickly, Keith.
Yeah, I agree with what he said. I think the supply figures suggest we've got ample supply going into the summer seasonals, and you combine that with the idea that there's concerns about macro condition, you may see the petroleum prices start to drift lower, and that's going to be good politically for everyone involved.
Keith, Trey, thank you so much, and we'll be back with more on our Inside Disney special. We've got special coverage all day, including coming up next, an interview with the CFO.